the first step when trying to start the home buying process is talking to a lender first, right? Because the lender is going to be able to see what they're have an idea what they're approved for and kind of guide them what to do to get them to where they want to go. So, uh,
Okay. I feel like the sound is lagging a little bit for me, but I guess that's okay, right?
hold on, let me mute.
Because I guess, I mean, I would love to hear your information, but I feel like as long as the camera's good, that's all that matters.
Hold on. All right, can you hear now?
I think it's better, yeah.
All right.
Okay. So going off of that, how can someone navigate the real estate market in terms of loans and things of that form? Like how should they get in contact with like a loan officer first? Like how should someone navigate like the initial process of it?
Ideally, it'd be great to talk to the loan officer first, right? Unless they're paying all cash for the property, which is super rare. But typically, because when you go to the realtor, the realtor is just going to navigate them to a loan officer, right? If they don't have one already. So, um, ideally, first step is to kind of look and see where they stand, and that way they get an idea. Like, okay, if you're trying to purchase at this purchase price, you need to have X, Y, and Z.
Okay, so essentially that'll give them all of the information of like how much the home, like what their budget will be and things like that.
Correct. So it's
Okay.
meeting with them and like just seeing like what are they trying to buy, right? And what's the maximum they're willing to pay on a monthly payment. So we can get an idea like, okay, well, you're qualified for this, but you told me you want to stay within this monthly payment, so that number looks like this, right?
Right, right. Okay. And how to choose, how can someone go about choosing the right type of home loan for their specific needs? Like, does that make sense?
Yeah, yeah, no, absolutely. So, uh, it's going to depend on their scenario, but typically I like to give two different options, right? One for a FHA loan and then one for a conventional loan, right? For an FHA, it's 3.5% of a down payment, and for a conventional, you can do 5%, right? But the difference between the two is the mortgage insurance and the interest rate, right? From what I've seen, conventional typically favors those with a better credit and FICO versus FHA. I think it's catered more to those that are kind of credit impaired.
Okay. And in terms of credit, can anyone be approved for a loan, or do you feel like they have to be at a specific place? I know obviously interest rates will vary, but
Sure.
can anyone be approved for a home loan?
So, yes and no. It's going to depend on a few major things, right? The bank's going to look at income, like how much income are you bringing in, whether you're self-employed or you're an employee, right? They're going to look at their debt, right? Someone could be making a lot of money, but if they have a lot of debt, right, it kind of cancels each other out. So they're going to take their debt into consideration. Then they're going to take into their assets, right? What are they coming in with down payment and closing costs, right? And the last thing is FICO. FICO is going to also determine what type of interest rate they're going to get for whatever loan product, whether it be a FHA loan, right, where you can come up with 3.5%, or it could be a conventional loan where you come up with 5%. There are other loan programs for self-employed buyers who don't report anything on their taxes for tax reasons. Um, so FICO and assets is going to play a huge role in those types of loans.
Okay.
Yeah.
And do you feel that pre-approval is important before going into buying a home?
Oh yeah, totally. Because the client will be saving so much time, and everyone will be saving time, right? Because one of the things I hear is that people want to look at homes, right? Because they get excited, like, oh, like I don't want to run my credit, or. But to me, I feel like that's always been mind-boggling because if you work so hard to maintain that credit, like this is what you use your credit for things like this to buy a car. to finance a home, right? So we need to check all that so you can have the answers up front. So you just go,
Right.
you know what you're approved for, and you can go house shopping.
Great. How can someone go about getting pre-approved for a home?
Like I said, just speaking with the lender, and typically, right, if it's a traditional loan, whether FHA or conventional, I'll ask for the same type of documents, right? 2 years worth of W-2s, right? Or if you're self-employed, 2 years worth of taxes, um, 1 month worth of pay stubs, 2 months worth of bank statements, and then I'll just have to check your credit report. Man, that's
Amazing.
it.
And what can someone expect when they're buying their first home?
I think they could expect that they should and probably will be anyways looking at different homes, right? And it is very common to maybe they won't get their offer accepted on the first try. But one thing that I will say, I do think it's super crucial where a realtor and a lender have a good relationship, because of the communication. And what I mean by that is I've had scenarios where we weren't the highest offer, and the listing agent told me this, where we weren't the highest offer, but because I communicated with the listing agent and showed proof of funds, assets, income, all that good stuff, right? And I assured them that we could close right with a certain time frame. So speed is also important. Um, that they picked our offer. So sometimes it's not even about money because if you have um, the same purchase price, right? You have two different offers, same amount. What else can you do to differentiate your offer from all the other people?
That's really good. I feel like I'm learning so much. What are some common mistakes that you see amongst first-time homeowners and something that people can keep in mind to avoid?
Oh my gosh. Don't. So once you're pre-approved, don't run credit on anything. Don't try to buy a car. Don't try to apply for credit cards. Um, Keep everything as is. Don't move large amounts of money around to one account to the other. Like just leave everything the way it is because we're pre-approving you based on your scenario right now, right? So if you pull out and I've had it happen to me before where someone pulled out a personal loan after we got into escrow, right? We were still able to close the loan, but it made it very difficult, and we kind of delayed on our end because he took out a personal loan. So if we could avoid all that up front, right, then it just makes everyone's life easier, and the buyer doesn't have to worry about am I going to put my deposit at risk because they don't know that, but technically they're actually putting their deposit at risk when they do stuff like that.
Right. You want to give me another one?
Another one? What do you mean?
Another common like mistake that first-time homeowners make, or just that
Well, those are the two big ones, right? A lot of the times they'll move money around, they'll apply for different types of credit.
but like different. Okay, yeah, that was a good response. It was so good that I wanted to potentially get more out of it. But okay, let's move on to the next one. Okay, how to choose the right loan for your needs. That might be a bit broad, so let me know if we should skip over that.
Yeah, so it is like a case by case scenario. So the way I see it, it's if the individual, the client needs to keep as much money in their pocket as possible, right? Then maybe going FHA 3.5% down makes more sense, right? And if they have a great FICO, everything checks off, and they're very sensitive to the monthly payment, then maybe conventional would be a better route. So it really depends on the type of client and what their needs are. Like I've had clients say, I don't care. I want you to pre-approve me. And I always do this anyways. I want to get pre-approved as much as possible, right? So I could find a home that I want, right? Just because they're pre-approved for that amount doesn't mean that they have to go that high. That's just the limit, right?
Right.
So typically people that have debt and they're trying to get pre-approved for as much as possible, FHA is the route to go.
What is the biggest difference between an FHA loan and a conventional loan?
Well, down payment is one, right? But another thing is a mortgage insurance, right?
Okay.
So FHA has a standard mortgage insurance no matter if you have a great FICO or a not so good FICO. Versus conventional, right? The mortgage insurance will fluctuate depending on your FICO. So obviously, the better the FICO, the lower the mortgage insurance. So that would probably, aside from down payment, that's probably like the biggest differentiator. And a lot of
Okay.
people, so with conventional, right, the interest rate is typically higher on a conventional loan. But so many clients and so many people are so focused on the interest rate that they're not focused on their monthly payment, which at the end of the day, like the monthly payment is more important than the rate. So if we were to compare an FHA where it has a lower interest rate and a conventional loan that has a little bit of a higher rate, but the mortgage insurance for an FHA is a lot higher than it is for conventional, like at the bottom line, you'll probably see that conventional will still be cheaper than a FHA loan if they have a great FICO.
Okay. And do you work with fixed rates versus some adjustable rate mortgages, or is it always like adjustable or fixed? Like, can you get into that, the difference between the two of them and
Yeah.
your experience with them?
So adjustable, right? It could be fixed for a certain amount of time, right? So you have like a 5 year, a 7 year, or a 10 year, right? And after that term, whatever term they pick, it would adjust thereafter, right? Or they could stick with the fixed term, right? A 30 year fix, 15 year fix, or maybe they want to do something specific to their needs, like a random number, like a 23 year fix, right? We can do that. But
So, oh, sorry.
go for it.
So is the benefit of doing like fixed versus like adjusted interest rates, is it really just like if someone is bad credit, they'll want to do like something that adjusts? Like, what's the benefit of doing one over the other?
So I'll give you an example. Let's just say you moved here to Cali from Massachusetts, right? And you know eventually you want to live in Florida 7 years down the road, right? So there's no point to get a 30-year fix because typically when you do an adjustable rate, it's a lower interest rate than a 30-year fix. So you'll have the home for 5, 7 years, however long you decide, whatever time frame, and it's cheaper on a monthly payment standpoint to go with a adjustable rate than a 30 year.
That's really good information. With the idea that maybe like after the 7 year period, I'd sell the home or something like that.
Correct.
That's really good. Okay. And can you give me like an idea of conventional loans versus government-based loans or backed loans?
So FHA is a government backed loan. Um, Conventional is technically they kind of are too, but so FHA is is insured through the how can I say it? So this is like really technical. It's actually insured through the government, right?
Okay.
It's technically it's not a um, how do you say it? Like a loan per se. Like it's a
Like a bank loan?
like it's just insured through the government
Okay.
versus conventional. It's tricky. It's still considered like Fannie Mae and Freddie Mac. They're considered like government loans, but it's not insured through the government.
When you say insured, you don't necessarily mean like home insurance in case something happens. Is it like insurance on the loan in case you
Correct.
don't pay for it or something like that?
Correct.
Okay. Okay, let's get into credit scores a little bit. How can one, this is a little bit broad, but I feel like people would appreciate this. How can one improve their credit score if they have intentions of buying a home soon?
Keeping their so I always give the example, right? If you have a credit card, right, and your limit is 10,000, right? Try to keep that at 1,000 maximum, right? Because it's 10%. So you want to keep all your credit card debt, everything at 10%. The more that you use up on that percentage, right, the lower your FICO score, right? So you'll see the moment that you pay that off, right, your FICO score is going to jump up.
Okay. Is that Gio talking? Because he's definitely going to catch that at the camera. Is that him?
No, it's not Gio.
No, dude, they have a meeting with Paul in the office. So, but it kind of gives us some character. I'll fix it in post.
You said what?
There's someone here at the office. That's why.
Okay. Okay, I don't hear it anymore. Okay, so how long of credit history does someone need when preparing to buy a home?
Um, there's no specific time frame, right? You just need to have FICO scores in place, right?
Okay.
And even it's kind of like a case by case scenario because even if they don't have a FICO score, it might still be manageable, right?
Okay.
But yeah, it's kind of like a case by case scenario.
Okay. And are you a believer in refinancing homes?
Um, I think it depends on why you're refinancing, right? So like
Okay.
if the interest rate's lower, right, to have a lower monthly payment, like yeah, why not? If you're trying to,
Wait, start over again because of the text message.
hold on, let
Yeah,
me
see if you
mute.
can mute that. Because you might be given some gems and then you can't use it.
Okay, say that again.
Okay. When should someone refinance a home?
It depends on their scenario, right? Like you don't just want to refinance just to refinance. It depends on do they need money to pay off debt? Do they need money to buy another property, right? So they could use the equity on their home to basically use that equity to buy another property, right? So like it's a case by case, right? Or maybe the rates just drop significantly compared to what they have right now, and so they'll just refinance to get a lower rate and have a lower monthly payment.
Okay. And how can someone go about navigating the refinancing process? Like, is it much different than the loan process? Do they,
It's the
like,
same.
I don't know if it's a good question.
No, yeah, like navigate to so to do a refinance is the same thing as if you purchased a house, right? So I'm gonna need the same documents, the same process, the same steps. The only difference that we're gonna add is a copy of the mortgage statement and insurance and taxes.
And when someone refinances, let's say that they were on like a 30-year term, do they start a new term for the loan or do they pick up where they left off?
So they could do either or. They could have a 30-year term, or we could pick it up where they left off. So typically, that's all I was saying. We could do like a random term, like a 22-year term. Like maybe they have 8 years in the mortgage, making the mortgage payments, right? So we'll do a 22 instead of a 30, right? But if we do a 30, they'll have a lower monthly payment, but the term will be longer. So it just depends
Right.
on what they want.
On the case scenario. Okay, and do you deal at all, Jaime, with like home inspections and stuff? Is that like within your realm of
Not really. That's more
no?
realtors.
Okay, let's just skip that. Okay. Can we go over like loan options for self-employed borrowers? Like how self-employed borrowers can qualify for a home loan? Like what if there's any difference that you feel like is good to highlight for self-employed?
So if they've been in business for 5 years, right, and we could show proof, we can work with 1 year worth of taxes.